Hey, welcome back. Let me describe a moment that almost every crypto investor has lived through. The market is dropping hard, 20% in a day, 30% in a week. Your portfolio is bleeding and the numbers keep getting worse. Social media is full of people calling it the end of crypto. News headlines are screaming about collapse. And somewhere deep in your brain, a voice is getting louder and louder: sell everything right now before it gets worse. And the people who listen to that voice almost always regret it, because the people who sold at the bottom of every major crypto crash in history watched the same asset they panic sold recover, and in most cases go on to make new all-time highs. Today, I am going to show you exactly how to stay calm during market crashes, why panic selling is almost always the wrong decision, and what the most successful investors actually do when markets are in free fall. Let us get into it. Why panic selling feels right, but almost always costs you. First, let us understand why panic selling feels so completely rational in the moment, even though it is almost always the wrong decision. When markets crash, your brain enters a genuine threat response state. The same neurological system that protects you from physical danger activates during severe financial loss. Your stress hormones spike, your thinking narrows to immediate threat elimination, and the most obvious immediate action that eliminates the threat of further loss is selling. This is your brain trying to protect you. And it was probably a useful instinct for our ancestors managing physical resources. In financial markets, it is almost perfectly designed to make you buy high and sell low. Here is what actually happens when most investors panic sell. They sell at or near the bottom of a crash after absorbing most of the downside. They hold cash during the early recovery because the market still feels dangerous. Then, when prices have already recovered significantly and the news turns positive again, they buy back in near the new high. They have successfully bought high, sold low, and bought high again. The investors who build real wealth in crypto do the opposite. They understand that crashes are not the end of the story. They are a chapter in a longer story that has historically ended significantly higher. Bitcoin has crashed more than 70% multiple times in its history. Every single time it recovered and went on to new highs. Understanding this historical pattern does not make crashes painless, but it reframes them from threats to be escaped from to opportunities to be managed carefully. The preparation that prevents panic. Here is the most important thing I want you to understand about staying calm during market crashes. Calm during a crash is not something you find in the moment. It is something you prepare for before the crash happens. The investors who stay calm when markets drop 50% are not emotionally tougher than everyone else. They are better prepared. They made specific decisions before the crash that made panic selling impossible or unnecessary. Here is what that preparation looks like. First, only invest money you do not need for any essential expense in the next 2 to 3 years. This is the most fundamental rule and the most violated one. The reason most people panic sell is not primarily because prices are falling, it is because they cannot afford for prices to fall. They invested money they might need. When prices drop, the practical pressure to sell becomes overwhelming because the alternative is genuine financial hardship. When you only invest money you can genuinely leave alone for years, a 50% drop is painful to watch, but it is not a financial emergency. And that difference in your practical situation changes everything about your emotional response. Second, decide your response to crashes before they happen. Sit down when the market is calm and write down exactly what you will do if your portfolio drops 20%, 30%, 50%. Will you hold everything? Will you use it as a buying opportunity and add to positions at lower prices? Will you rebalance? Having a written plan that you created when you were calm and rational means that during the crash you are executing a plan rather than making desperate real-time decisions under maximum emotional pressure. What to actually do during a crash? You are in the middle of a crash right now. Prices are falling. You feel the urge to do something. Here is exactly what successful investors actually do. Step 1. Close the portfolio tracker. This sounds almost too simple, but checking your portfolio repeatedly during a crash does nothing constructive. It only amplifies the emotional pain with each refresh. Every time you see a new lower number, your stress increases and the urge to sell grows stronger. The portfolio does not need your observation to recover. Closing the app removes the constant reinforcement of the negative emotion that drives panic decisions. Step 2. Return to your thesis. Ask yourself one specific question. Has anything changed about why I invested in this asset? If you invested in Bitcoin because you believe in its long-term store of value proposition, a price dropping from 40,000 to 20,000 does not change that thesis. The technology is the same. The adoption trajectory is the same. The supply dynamics are the same. The price is lower. If the thesis is intact, the rational response is not to sell. It is to hold and potentially add at better prices. If the thesis has genuinely changed, meaning something fundamental has broken about the project or asset itself, then selling may be appropriate, but make that decision based on the thesis, not based on the price movement. Step 3. Zoom out on the chart. Pull up a monthly or weekly chart instead of a daily one. Crashes that look catastrophic on a daily chart often look like small corrections on a multi-year chart. This visual reframe does not change the numbers, but it dramatically changes the emotional context in which you experience them. Historical perspective is one of the most powerful tools for maintaining calm. Crashes that felt like the end of the world in the moment are often barely visible on a long enough time horizon. How the best investors use crashes to build wealth. The most successful crypto investors do not just survive crashes, they use them. Every major crash in crypto history has been followed by a recovery that created significant wealth for the investors who stayed calm, maintained their positions, and in the best cases added to those positions at lower prices. This is not hindsight bias, this is a pattern that has repeated consistently throughout Bitcoin's entire history and across most major crypto assets that survived. The investors who understood this treated the 2018 Bitcoin crash from 20,000 to 3,000 not as a catastrophe, but as a buying opportunity. The same investors treated the 2020 crash from 10,000 to 4,000 the same way. The returns for those who held or added during crashes versus those who panic sold at the bottom are not marginally different. They are dramatically, sometimes life-changingly different. Here is the practical framework for using crashes to build wealth rather than destroy it. Keep a portion of your portfolio in stable assets or cash, specifically reserved for crash opportunities, not money you will need, money you have designated in advance for exactly this scenario. When a crash happens, refer back to your thesis. If the fundamental case for your assets is intact, deploy that reserved capital gradually during the decline rather than all at once, since you can never time the exact bottom. This approach turns crashes from threats into scheduled opportunities, which completely transforms your psychological relationship with market volatility. Let me bring this together. Panic selling feels rational during crashes because your brain enters a genuine threat response that is designed to eliminate immediate danger. But in financial markets, this wiring almost always leads to the worst possible decision: selling near the bottom and missing the recovery. The preparation that prevents panic starts before the crash. Only invest money you genuinely do not need for years. Write your crash response plan when the market is calm, so you are executing a plan during the crash rather than making desperate real-time decisions. During a crash, close the portfolio tracker to remove the constant emotional reinforcement. Return to your thesis and ask whether anything fundamental has actually changed. Zoom out on the chart to restore historical perspective. And the best investors do not just survive crashes. They prepare for them by keeping reserved capital specifically designated for buying opportunities during market declines, transforming their psychological relationship with volatility from threat to opportunity. Here's the truth that I want you to carry forward. Every crash in crypto history felt like the end when it was happening. None of them were. The investors who stayed calm, held their thesis, and in the best cases added during the fear, are the ones who built real wealth in this market. Your ability to stay calm when everyone else is panicking is not just a psychological virtue. It is your single greatest competitive advantage in this market. Build that ability now, before the next crash arrives. If this video gave you a clear framework for managing crashes emotionally and practically, please hit the like button and subscribe. Drop a comment below and tell me about your worst panic sell experience. What happened after you sold? I read every comment. I will see you in the next one. Trade safe.